Parse through the most crucial moments of the trading day. Guys, I haven't been on air for about 5 whole days, 5 whole trading days,
Welcome
and it
back.
feels like it's the same deal. We're just selling here, selling, right?
You're welcome. You're welcome.
You.
We had some updates last week, though, at the beginning of the week.
Long forgotten right now.
Yeah, but it's like, no, we're just going to still stay into the selling mode. Yeah?
I will say, interesting to see some buying into the close. We talked earlier with our Eric Weiner, though. He said that volume was kind of low here. But nonetheless, to see in the last few minutes of trading that there are some investors finding some opportunities, even though broad-based selling and a lot of names are down. I think that's a little bit of a positive sign, but little one.
Okay, all-time high for gold. We knew that. Have you guys seen what Bitcoin is doing? This is a little wild. Bitcoin's at its highest going back to the end of March. It's up another $2,200 today. The moves counter to what's happening in other risk assets today.
Yeah, well, short-term treasuries are also up, and short highly rated credit is also up. So those are your havens today.
You know what's down? The dollar. We're at a 3-year low when it comes to the dollar. It still feels like it's sell equities, sell the dollar, sell the long end of the curve. So it's still that sort of push to selling U.S. assets, and I just wonder kind of how much that theme has to go.
Yeah, exactly, right? That's what we're trying to figure out. Where do we bottom out? And you keep thinking maybe earnings are going to help us. But we talked with our Gina Martin-Adams, and it feels like people continue to, reduce those earnings estimates for this year as well as into next year.
Ooh, great timing, guys. There is a closing bell on this Monday. You're looking at S&P closing off about 124 points. That's about 2.3% off the low. So a little bit of buying into the closing bell. The Dow Jones Industrial Average, guys, off by about 2.5%, and the NASDAQ off by 2.5% as well. That was the big underperformer, guys, but it feels like now we're pretty much on par. And I'm just taking a look at the Russell, the small caps closing right in line. 2.1%, Carol.
All right. And as we've been saying, broad-based selling, though, on this Monday. So if I look at the S&P 500, roughly 463 names to the downside, and you've got about 39 holding on to some gains here.
All right, let's take a look at the IMAP. Pretty simple today. There's no cheese, there's no pesto. It's just all red sauce and maybe some pepperonis in there. Everything is down across the board. 11 sectors all in the red. Even when you slice it into 24 industry groups, Carol, all 24 groups are falling as well. The better performing groups, food, beverage, and tobacco, consumer durables, and apparel. So that gives you a sense of where some of the safer places to hide might be.
It's like a super bad sunburn. That's what it looks like. All right, let's get to some of the individual gainers. Cross my fingers that they're holding on to it. Netflix, up as much as 4.7% today, closing with about a 1.5% gain. This is a top gainer in the NASDAQ 100. Saw it higher, too, in the S&P earlier. Some momentum. I forgot, like earnings on Thursday before the long weekend. It feels like a lifetime ago. We did get that. The company did come out and it did forecast revenue for the second quarter that beat the average analyst estimate. And analysts are seeing the company's business as resilient amid a tougher macro environment. So the expectation is that, maybe Netflix is one of those things that you don't
Well,
really
here's my
cancel.
question, Carol.
Yeah.
Is Netflix discretionary anymore?
Well, exactly. I mean, there's been a lot of research, right, where folks are saying, or, that maybe it is, you got to have this. Like, it's a cheap
it's a utility.
luxury, right?
If you cut the cord, then you probably have Netflix.
That's what I'm saying. Like, there's no way that I would let that go. I would let go other apps before Netflix. Anyway, I digress.
All right, consumer staple then. All right, Discover Financial, number one gainer in the S&P 500, up about 3.5%. It was up more than 7% during its highs today, but still holding on to about a 3.6% gain. Capital One receiving approval on Friday from U.S. regulators to buy Discover, and this creates the nation's biggest credit card issuer by loan volume. Capital One, we also saw trade higher in today's session. Analysts kind of weighing in. They say maybe we could see some more consolidation, and they do say the deal creates significant value for shareholders. So that's a pop here in today's session. And Fidelity National Information Services, FIS is the ticker. This went up about 2.4%. This is your number three gainer in the S&P 500. Payment services company raised to buy at both Citi and TD Cowen following recent deals with Global Payments, sale of a stake in WorldPay, and purchase of an issuer solutions business, making the company's business model steadier. That's according to TD Cowen. So some decent gainers in today's session.
Some decent decliners in today's session is another way to put it.
Embarrassment of riches for you.
It really is. I mean, look at Tesla right here, down 5.8%. It was down as much as 7.7% earlier in the session. Questions remain over Elon Musk's role within the federal government and uncertainty over the company's plans to introduce a lower-cost EV. Dan Ives over at Wedbush out with a note over the weekend that said Musk should step back from his government work and focus on Tesla, citing brand damage and a potential 15 to 20% permanent demand destruction. Here's what he wrote. Musk needs to leave the government, take a major step back on Doge, and get back to being CEO of Tesla full-time. Tesla is Musk and Musk is Tesla, and anyone that thinks the brand damage Musk has inflicted is not a real thing. Spend some time speaking to car buyers in the U.S., Europe, and Asia. Once again, Dan Ives over at Wedbush out with that note. Shares are down more than 50%, though, from those highs back in December. Moving on to another mega cap name, Amazon, falling in today's session, down a little over 3%. It was downgraded by Raymond James due to anticipated earnings pressure from increasing investments in U.S. tariff increases on imports from China. Despite the downgrade, 95% of analysts that are tracked by Bloomberg do recommend buying the stock. Some cite attractive valuations relative to its history. And finally, how about one for the folks who go out to lunch? Sweet Green, down today by 8.2%. It was down as much as close to 12%. This after the company said its COO would leave the company, and separately, B of A cut the target from $36 to $31. Sweet Green shares are down more than 61% from their highs back in November.
So yeah, that's because $20 salads may not be most people's staples. That's like definitely a cost you
it's
can
like
cut.
a Netflix, a full subscription to Netflix for the month in a salad, right?
Yeah, like what would you do? A salad per day or Netflix? You keep Netflix, you boot the salad, and you eat food at work. Not that I do that. All right, guys, I'm going to the bond market. You're seeing buying in the front end, selling in the back end. This is a very typical situation over the last couple of weeks. That curve steepening. If you look at the 2 and the 30s, this is the steepest curve since January of 2022. And the velocity and the move that we've seen in this has been quite staggering. And I just wonder how much more juice there is to go. I mean, that 5 year, I mean, the 30 years almost at 5% at this point, guys.
Yeah, it's pretty remarkable to continue to see the steepening of the yield curve here. And, you know, it makes the Fed's job much more complicated as well going forward. Not to think that Jay Powell had it easy at all, given the kinds of things that President Trump is saying about him on social media.
Yeah, listen, I mean, it just is another uncertain, aspect to the overall environment that is full of so much uncertainty right there. And so you just think about what's ultimately the impact, right? We've talked so much about CEOs maybe not spending, CapEx spending, and maybe not hiring, and all these things just ultimately put a damper on the economy. You just kind of think about where this ultimately will go, or could it change in 24, 48 hours, or in 60 days or 90 days? I guess, that's kind of
the next 3 years.
Look, who knows if it's going to change over the next 3 years or 24, 48 hours. What I do know is over the next few days, we are going to hear from a lot of companies, including Tesla tomorrow. That's certainly a big one. We'll hear from Lockheed Martin this week. We'll hear from Boeing on Wednesday. We got Texas Instruments. We got IBM. We got Norfolk Southern. We got Intel on Thursday. We also got Alphabet coming up as well this week. So a lot of questions that I know analysts are going to have about CapEx, hiring, how these companies are looking at tariffs, and hopefully we'll get some answers this week.
I was telling Scarlett that I spoke to Gina Martin Adams of Bloomberg Intelligence on Bloomberg Radio earlier today, and she said that 65% of companies have missed sales in the first quarter so far. So what does that mean? Is that because the sectors that we got just happened to miss sales? Is that because expectations were just too high anyway, and everyone thought that it was going to be pretty easy to beat any sort of tariff issues, and then we realized that wasn't actually true? Or are we really going to see some earnings season roll over here? And if that's the case, do we need to lower our estimates for earnings for the whole year from 8% to what? ... Question mark.
That's so interesting, given that we know anecdotally so many companies are front-running the tariffs by buying a lot of what they need. I think about, a lot of consumers going out to buy a lot of stuff right now before the tariffs come into effect. If you're still seeing revenue decline, what does that say for when the tariffs are actually in place and people are really holding back on their spending?
I want to go back to what you were saying, Alex, because we talked with Gina too, and that revenues miss was really surprising. And then she also talked about, analysts basically, talking down their numbers, the projections for this year and what they expect from companies. But then she said they're starting to do it into 2026. So, that's a pretty negative sentiment and has to be a little bit worrisome at this point.
At the same time, perhaps we'll start to hear about one-on-one trade deals being reached with different countries. I think certainly the one that has most investors concerned does include China. But maybe we'll start to hear from the president and the folks working on trade policy when it comes to individual countries, and that maybe they've reached deals. So some clarity there, perhaps.
How are we feeling, guys?
It's a Monday.
It's a Monday.
Monday after a shortened week.
Whew, it's a rough one. All right, that's our cross-platform coverage. Radio, TV, YouTube, Bloomberg Original. Scarlett and Alex continuing over there on television. Tim and I are going to continue here on Business Week. We'll see you again, same time, same place tomorrow.